Hey, how is it going, everyone? I'm going to go over today's daily plan. I'm going to go over the makings of it, and we'll take a look at today's intraday order flow, as well as take a look at the trades I took today. So, I took one live trade, and I took one simulated trade. So, let me flip to live, as that was the first trade I took. And one second. All right, I just had to adjust one of my charts. Beginning with the daily plan, I had 3 levels in my daily plan, 2 sell zones, and one very cautious buy zone. Now, as you can see, we have not interacted with any of them, which is fine. That happens a lot. So let's take a look at the TPO, and that's where I always start my daily plans. So this is a TPO chart, also called a market profile chart if you're new to the channel or just unfamiliar with these. If you are new, yes, they look very intimidating. I know I was there, and pretty much everyone else who has learned these. They look intimidating when you first look at them, but they're really not. They're very easy to learn, and once you do know what you're looking at, simply at a glance, you get all the information you need. So, what type of information do we take from TPO charts? This allows us to visualize the market auction. Makes it much more palatable, the information much more palatable, rather. And so that we could see, are we trading in balance, out of balance? Are we creating balance, accepting over, accepting under? Are we leaving structure behind to be cleaned? A whole bunch of different things, right? So I take a look at what the overnight session did, as I did not trade the overnight session. And then from there, we flip back to this chart that we were just looking at. Now, this is called the footprint chart. If you're unfamiliar with footprint charts, go to the home of the YouTube channel here. And I believe the video is called How to Read Charts Like a Professional Trader, right? And that's just going over how to read these charts and brief explanation on how to interpret this information we're looking at. Essentially, what we're looking at is the transacted volume. This is the E-mini, right? The E-mini S&P 500 futures. So we're looking at contracts, not shares. All right. So what I do here, I actually take a screenshot of exactly what we're looking at here. I just go to Paint on Microsoft, and I annotate everything I see. So do I see a big offer, a big bid? Is either side more aggressive, trying to move up or down on the tape? Do we have exhaustion? And then I relate this to what we see on the TPO and build confluence between these two tools. From here, I do the same exact thing, but on the daily chart. So with the daily chart, we're able to look at longer time frame participants, bigger participants in the auction, and here we could see the same things that we're looking at in the 4 hour, along with, do we have participants who are trapped? Do we have shorts who are trying to move down on the tape, being aggressive, and they're caught off sides, right? Are they trapped? Maybe buyers are trapped. Do we have volume or areas with high volume? Do we have areas with low volume? Now, each of these things obviously mean different things, and due to the context of where they are in structure will also mean different things. Now all of that is taught, and this is always going to be part 3 of my daily plan. So I annotate the TPO 4 hour and now here. I send that in the daily plan tab in Discord. Some people learn better with annotations, reading for themselves, and some people with videos. So after those, then I'll go and find levels for the daily plan, and I will record a video. I'll send the daily plan out in the daily plan tab on Discord, and then I record a video just like this, similarly, but I go over what things that I saw at each level that build the confluence behind them, why maybe this is a buy zone, for example, and not a cautious or very cautious buy zone, all that different stuff, so people can then do it for themselves, be independent traders. So from here, I'm going to pull up Friday's daily plan. So with Friday's daily plan, we had a sell zone around this area. Now, it didn't exactly mark Friday's high day. It overshot it just a bit, but it still was respected this order flow level during this overnight session, where it was the high of the overnight session until, obviously, the cash session. So let me pause and I'll bring up that daily plan. So here it was, this, do I have, oh, okay, 1 second. All right, my apologies. This wasn't from Friday's plan. This was actually a old level. I actually had to go back to the daily plan from February 22nd. We didn't trade this level since then. and that level being 32 to 37, 41, 32 to 41, 37, of course. So let me plot that on the 30-minute chart, and I'll bring this up. So this is a closer time frame of the order flow today, right? I don't remember if I said this or not, but these are called footprint charts, for those wondering. So this marked the high of the overnight session once more. What did I say? 32, right? Okay. So I didn't get the initial touch during the London session, as again, I don't trade the overnight session. So when I got to my office in the morning, this is what I saw. You see these selling imbalances. Sellers are still active, still respecting this level, and this is where I took this short. So if we go to my actual executions, something I want to talk about, and I think should be really the topic for today's kind of recap, would be knowing when to participate and when not to participate in the market, and as well as the mistake that I actually made in this trade that is very valid to go over. So when to be active, when not to be active. I always say you want to be active at your inflection points. This morning we are active. I liked the order flow at my personal inflection point that I found, and I wanted to be active. When not to be active is like today. This cash session, we haven't traded my inflection points. I haven't taken any trades. So what I do on these days, and how to practice and become better, I think, is always to either replay tape, or on days like this where you shouldn't be trading live funds, is flip to sim and try practice tape reading. And that's exactly what I did, and we'll take a look at that simulated trade that I'm actually still in. But again, this trade was live funds, and here I went short with the sellers that we saw here. Started going in the money. I think it went 3 or 4 points or so, came back against me, and I honestly got nervous. I had a rookie mistake here, and it shook me out. I came back, I collected just one tick, pay for the commissions, whatever I'm out, I'll wait for the open session. Now, I always say in the room, and it's a rule of mine, once the trade is on, I have to respect the risk that I put down. The second I enter trade, say I'm risking $5 or 5,000, it doesn't matter. That's what I'm paying to enter the market. The risk is on, I'm going to respect it. I either get my stop loss or my target. So I always risk 3 points. My entry was 36 quarters, meaning my stop, of course, was 39 quarters. As you can see, never hit, and where I was looking to take 75% off was 6 points or 2R, which if I didn't get a fill there, I would have got one there, right? So as you see, I was right. The order flow, I mean, there's no denying it. Sellers were active here. It's just the psychology part of trading that got to me. So yeah, I got a scratch trade when I could have easily got a nice trade, finished my day really early in the morning, and not have to really be monitoring the tape and waste time, at least for me, coming into the open. Why wasting time? Because we weren't at an inflection point. Now, let's talk about this trade that I did take. I'm actually long from almost the bottom, and that's from reading the tape, right? We see exhaustion at the lows, buying imbalance at the lows, and what do I always say? Now, this was the buy zone. Actually, let me just erase it so that doesn't confuse anyone. What do I always say? You want to be long on stop runs. So what do we see when we look in this area? We see a lot of volume, right? I want to see these participants be stopped out. On their stop out is where I went long. I actually got to flip back to sim so we can see the executions. All right. Where was I? So really, if I was done in the morning, I wouldn't have to wait for this. I could just put alerts for my zone and walk away. So I didn't have the conviction to take this, even though the tape was clean, with live funds, because I wanted the extra confluence of being at a key inflection point. So here to the right, we could see the order flow in the 30-minute chart, and here is my entry. So let me just make this better for us. All right, so we have the whole day in session, right? We established IB high around here, just pierced it a little bit, came back, pierced IV low, stopping out those participants, and this is where I went long. And just like before, I structure almost all my trades the same. So risking 3 points, a really good tape read at the lows. I'm actually going to replay this tape and talk about exactly what I was looking for, and talk it out in real time. You know, I see a bid, I see an offer, this is what you're looking for, etc., without getting too specific. And I'm going to have that in the room. So I started a live, or not live, I guess a replay tape reading series, so members can go back and replay it themselves and really get as specific as I can with how I read the tape live. So risk 3 points, 75% off here at 2R, which is 6 points. And I just want to add here, due to the topic, is how we could get better at trading is that just because you're trading live, sim rather, that doesn't mean you're just taking every single trade. Treat sim as if it's live. Another day, maybe I could have taken this trade and taken it 1/10 of my normal size, just to get some risk exposure, not really going full size at something that's not an A+ setup, even though the tape is in my favor. So, yeah, 75% off at 2R. I have another half off of my position here. Now these are all structural levels. This isn't based on R. This one is 2/3 off, and then all out here. So yeah, just what I want to hammer home. If you want to become better at trading, order flow, if you don't already use it. You're really trading blind without it. Why wouldn't you why wouldn't you want to dissect candles and see where there are buyers, where there are sellers, rather than trading with less information? At TPO, you need to know the market auction. I always say trades not only need your framework. So say you're a chart trader and your framework is a double top or double bottom. If you're taking every double top and double bottom, there's a reason why that doesn't work. You need the context around those trades as well, being, we're accepting above balance, I want to go long. We're accepting below balance, I want to short. Things like that. You need the structure behind it. You need to know what's going on in the market structure and have the patience to wait for the highest confluence setups, right? If you want to make trading a career, you have to think about it in the long run and not just trying to get a trade off every day. It's not about making money every day. It's about taking good risk to reward setups and your key inflection points that have the most confluence between all of your tools. So I'll stop rambling here. I hope that helped. I hope you guys all had a green day today. Happy Monday, and I will see you guys in the next recap.